In this video, I'm going to show you a mean reversion trading strategy which uses Bollinger Bands. We're going to look at the hourly chart of US dollar versus Canadian dollar Forex pair. The entry and exit signals are really easy to identify using the Bollinger Bands, and then we're also going to add some additional filters to improve the results of this strategy further still. Firstly, I'll do a quick drawing on the whiteboard and I'll show you exactly how to get in and out of the trades. Then we'll go over to the computer and I'll show you the results of those trades. Then we'll talk about the additional filters. Then we'll add the filters and see what the results are or how they've improved the strategy using those additional filters. So let's go over to the whiteboard now and we'll talk about how to get in and out of the trades. Here on the whiteboard, I've attempted to draw the Bollinger Bands indicator. Now I'm using the standard settings. So most charting packages have Bollinger Bands, just add those to your chart. I've mentioned that we're using an hourly chart of US dollar versus the Canadian dollar. With a Bollinger Band, this centre line is essentially just a moving average. So this black centre line you see here is the moving average, or what we might call the mean. This strategy is sort of a mean reversion strategy, and let me explain a little bit further. Mean reversion typically looks at selling short when prices are overbought or overstretched, and then covering or taking profits when they revert back to the mean. So in this case on the board, these black dashes are just the price bars. I've just drawn them any old how, and there's no open or close ticks on the bars. When these bars come outside of the upper or the lower Bollinger Band lines, they are regarded as overbought and oversold. So an opportunity for a short sell is when the price comes out above the upper Bollinger Band, and then when it reverts back towards the mean, like here, it reverts back to that centre line or that centre moving average, the mean average. However, with this strategy, we're not actually going to take profit at that centre line. We're actually going to wait until it goes the other way and becomes oversold. So specifically, how we want to trade this strategy is we're waiting for a close, and you see I have drawn the close on this bar. We want to see a closing hourly bar above or outside of that upper Bollinger Band. When that happens, we immediately sell short on the next bar and we exit on the reverse signal. The reverse signal is when we see a close below the lower Bollinger Band. So most of the time this strategy is going to be in the market. It's a stop and reverse type strategy. So we're not taking profit exactly at the mean. We're waiting for it to become, in this case we've shorted it, and we're waiting for it to become oversold before we take profits, and then we actually exit the short position and then we actually buy, so we reverse our position. So although it's not strictly mean reversion, we are still selling short into overbought or strength and then buying into weakness. I hope I've made that clear enough. So let's go over to the computer and I'll show you a few trades on the chart and we'll look at the results of the strategy. Here in this first workspace then, we can see the hourly chart, the 60-minute chart of US dollar versus the Canadian dollar, and it's data from Oanda. To carry out this development, we're using data from January 2008 through till the end of December 2018. And then what that allows us to do is to do any modifications to the strategy and then look at some out of sample data. So data from January 2019 through till it's kind of the present day, which is in May 2021. It gives us some unseen data that we haven't optimized to see if our improvements or if the original strategy is still working with that unseen future data. So you can see on the charts the Bollinger Bands. You can see this cyan upper Bollinger Band, the red lower Bollinger Band, and the centre, essentially the moving average. Now, you remember the signals to get in is, the way I programmed it, we want to see the bar cross under the lower Bollinger Band and close. So here we go, we've got a close under the Bollinger Band here, and then the exit is the first cross of the close above the Bollinger Band, which is here. That's quite hard to see, but I trust the program that it has closed above that upper Bollinger Band. So we've exited, so we're long here, we've exited the long position, and then we've opened a new short position, and then we wait for the close to cross under the lower Bollinger Band here, and then we exit the short position, and then we buy. Okay, so you can see that we're sort of always in the market at the moment. We'll quickly have a look at the performance report, and there's the equity curve. So this is the basic strategy with no real modifications, and it's not the best equity curve, but it's definitely moving in the right direction. So that gives me confidence enough to move forward and look to make some further developments. At the moment, we've got quite a low average trade. The average trade is only $32. We've got a lot of trades, 1,739. The next thing I'm going to do is I'm going to add a trend filter based on the previous couple of days. So when we're looking at a trade, for example, let's say it's midday, and what we need to look at is the previous 2 days worth of data. We want to look at the daily bars. Now, we only want to go long or take buy positions if yesterday had a higher high than the previous day's high, and it had a higher low than the previous day's low. Okay, so yesterday's bar, the high was higher and the low was higher also compared to the previous day. So we're momentarily in a bit of an uptrend, and then during the day on the 60-minute chart, we've momentarily had a bit of a pullback, and the idea is that it's just a momentary pullback on the hourly chart, and we're going to resume that uptrend. And totally the opposite is for the short trades. So we only take a short trade, or only exit a long trade as well, remember, if yesterday's high was lower than the previous day's high, and yesterday's low was lower than the previous day's low. That's our trend filter. Now I've programmed this into my little code, and it's very easy to switch on, and we'll have a look at the results for that now. Here in the inputs, I've got this input called trend filter, which turns on and off that trend filter. When it's at 1, it uses the trend filter. 0, it doesn't. So now it's actually on 1. Let's have a look at the results. And here's the equity curve, which actually almost looks a bit choppy, almost looks worse. It looks a little bit more volatile, especially in these early years. Let's have a look at the average trade though. We can see that the average trade's gone up now from $32 to $55, which is good. So hopefully we're filtering out some of the worst trades. So I'm happy to stay with this trend filter for now. And the next thing I want to look at is, are there certain times of the day when taking the signals work better than others? Now I often find this with intraday strategies, and I've already done the development, I've already done the optimization before I came on camera, and it seems that there is. It seems that taking trades pretty much in the London session or the London Forex session do work better. And rather than normally showing the optimization report on Multicharts, I've actually created a couple of charts to help me show you why I came up with those decisions or those choices of times. So on this bar chart here, we've got 24 bars. Now, this is the starting time to trade. Currently, we're taking trades whatever time of the day they occur, and I've programmed in to say that only take trades if they're after X time and before Y time. So at the moment, only take trades if they're after 0 or midnight and before midnight the next day. So we're taking trades whenever they occur during the day. Now this chart shows from 0, 1, 2, 3. This is the time. So if we used 800 as the starting time, then we would only take the trade signals if they occurred between 800 hours, 8 AM and midnight. If we got signals from midnight through to 8 AM, we would ignore them. So what this chart is showing us is at the time that we want to start trading versus the net profit. And what we can see essentially is if we start trading at 1 AM and trade all the way through to midnight, then we're going to get the best net profit. This is the highest bar, over $40,000 with 1 AM. But in fact, anything from 0 through to 6 AM as a start time does actually work. I'm going to actually use 1 AM just because it's the highest. In reality, it's probably hardly any different between starting at midnight and 1 a.m. That hour doesn't make too much difference. It does make a little bit more net profit. It's going to be a few less trades, but the trades are going to be of higher value, so we are going to have a slightly better average trade. But it's nice to see a good stable area. So we're going to use a starting time of 1 a.m. Next, we obviously want to look at, is there a time to stop trading? So we're starting to take trades from 1 a.m. and this chart shows you the end time. So currently we're at 2400, so we start at 1 a.m. and end at 2400. But is there a better time to stop trading? And yes, there is. Look, anything from 9, 10, 11 through to 1400. These are all very strong end times for this trade. And I'm actually going to use 1400. It's not the highest, however, it does trade the longest because we're trading from 1 a.m. through to 1400. We could have used 10 a.m. because it is the highest net profit, but we are filtering out more trades. We are narrowing our time window. And in my experience, the more we narrow things like that, the more over-optimized the strategy could become, and essentially it might stop working in the future. So that's why I've decided to use 1400. So we're only going to be taking these signals if they occur between 1 a.m. and 1400. So now we know the best time window to trade in. Let's have a look at the performance report to see how the results have changed. Let's just remind ourselves, this is using a start time of 0 and an end time of 23:59. We're using that trend filter. So let's just remind ourselves what the equity curve looks like. The equity curve that we've already seen. Now let's add the start time of 1 a.m. Equity curve looks very similar as we expected. But we have got an increase in the average trade. We're now at $61 for the average trade. Now we've added the end time of 1400. So now we've got that trading window. And you can see the equity curve is much nicer now. It's a lot smoother. We haven't got these early spikes. And I quite like that. Looking at the total trade analysis, we've got an average trade now that's jumped up, it's more than doubled since we changed that end time. We're up at $127 now, average trade. The next thing we're going to do is have a look at, are there any days that maybe we shouldn't trade? Are there any days that produce really bad results? And we can do another optimization like that. I won't show you the chart, but I'll show you the optimization report. It's dead easy to see the results. But before we do that, if you find this video helpful and you're enjoying it, then please give it a thumbs up now. Here we can see the optimization to data filter. So if we filtered day 0, we get all of the trades. Remember, we've got that average trade of $127 like we've just seen. Net profit, 78,000. So looking down the results, the best day to filter is day 5, which is a Friday. We do get a higher average trade, but it is lower net profit. So because it does actually reduce the trades quite a lot, it doesn't increase the net profit, and $127 is still okay anyway. I'm not going to bother using a data filter. I'm just going to leave it to taking trades every day. The next thing we need to do is look at some sort of a stop loss. Now I'm going to look at just using a fixed pip stop loss because they work well, and I've done an optimization going from a stop loss of 0, which means we haven't got a stop loss. We've already seen the results for that, right through to 500 pips for the stop loss. And classically, mean reversion strategies do suffer when you start introducing stop losses, but most of us do like to trade with stop losses. So looking down the results, using no stop loss, we got that 78,000. We do actually slightly improve with 79,000 using a 425 pip stop loss. That is a very large stop loss. For me, I would rather choose something around about 250 pips because we have still got 70,000 and we've still got $112 average trade. We've got less max intraday drawdown too. So let's use 250 pips for the stop loss and see how that's affected the performance report. The equity curve still looks quite good. Looking at the total trade analysis, we know now the average trade has come down a little bit to 112, but our largest losing trade now is much smaller at only $2,500 because of that 250 pip stop loss. And the last thing I want to do is look at that out of sample data. If we look at this chart here, we can see we're using data from the 1st of January 2008 through till the end of 2021. Realistically, if we look on the chart, we've actually got data through till the end of April 2021, because that's as much as I've got loaded at the moment. Looking at the equity curve then, we can see that we are making new highs, which is good. If I hover just with the mouse at this point here, we've got the start of January 2019. So this point here was from where our old data stopped. So we can actually zoom in. Let's just zoom in and have a look. We can see that sort of beginning of January down here, we have made new highs. It has gone a bit flat, but essentially we've got some new highs, which is good news. And we can see that on this chart here with the green dots showing us the new highs. That means that the strategy has still performed in unseen or out of sample data, and hopefully that's likely to carry on and we will see more new highs in the future. In conclusion then, we've seen how US dollar versus the Canadian dollar on an hourly chart, once it hits those extremely overbought and oversold levels, it does actually rebound. That gives us a chance to make a trade, and we've seen how to use Bollinger Bands to identify decent entry and exit points. I encourage you to do some testing too. Apply this method if you like. Apply it to some different time frames and different markets, and I'm pretty sure you'll come up with something that works just as nicely, if not better, than what I've just showed you there. Maybe you already trade something like this. Let me know in the comments if you do, or let me know in the comments if there's anything else that you think might make an interesting test, something that could be profitable. If I test it out and it works very well, then I'm sure I'll make a video about it to share it with you guys. But that's all for this video. I hope you've enjoyed it and possibly even learned something. And until the next one, this is Jared Goodwin, and thank you.